If you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down.
Once again, Bitcoin is in the $40,000 price range after falling rapidly for 2 consecutive trading sessions. While traders and speculators are watching out for key support levels, anonymous Bitcoin analyst PlanB says such volatility should be expected for an asset with such high returns as Bitcoin. The Dutch institutional investor adds that investors panic and make rash decisions when the digital asset dips continuously over a period, forgetting that the volatility is required for high returns. Welcome to Savvy Finance. In this video, we examine PlanB's comments on critical issues that are currently affecting Bitcoin. The analyst talks about his stock-to-flow model, Bitcoin's high volatility, and reasons why the coin has not gained much momentum over the past 6 months. If you want answers to these puzzling and critical issues, ensure you watch the video to the end and click the like button. Enjoy the video. In a recent interview, PlanB, an institutional investor and Bitcoin analyst famous for his stock-to-flow model, shares his thoughts about the current market situation. Firstly, he talks about the crypto's high volatility. PlanB explains that Bitcoin has always been a very volatile asset, and it is the same volatility that gives it the high returns that investors so much love. For people who would rather have one but not the other, PlanB says high volatility and returns are crucial aspects of assets like Bitcoin. They come as a pair.
And I think it's an excellent question about the volatility, because Bitcoin is so volatile, it gets attacked for that attribute. But with the volatility comes the return. Experienced investors know that. There cannot be return without volatility. But I've seen it personally with the stock-to-flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. Stock-to-flow model and PlanB is the man, the myth, the legend. But when it's down, and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019, when I published the article, we were very much down. It's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing. And investors and people in general seem to forget that it's just volatility. And the overall trend, if you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down. So yeah, I guess it's a question of perspective.
PlanB's host for the interview and former White House Director of Communications, Anthony Scaramucci, also questions the analyst about his stock-to-flow model. Scaramucci, who is also very bullish on Bitcoin, states that he believes PlanB's stock-to-flow model is the most prescient model available for analyzing the digital asset. Scaramucci also believes the model fits perfectly with Warren Buffett's famous saying, "I would rather be roughly right than precisely wrong," alluding to the fact that the model only gives a rough estimate of Bitcoin's price. Here's what PlanB has to say about his stock-to-flow model and why it has not been very accurate in the past few months.
Excellent point. And Warren Buffett quote, use it a lot. It goes back to the volatility argument. An asset is very volatile. The chances of estimating or evaluating it very precisely are lower than if it's an asset that doesn't move very much, so like gold or actually any other asset. To try to predict or evaluate Bitcoin it must be a very rough estimation. And you're right, the stock-to-flow model is very rough. So stock-to-flow is basically saying that if an asset is scarcer, it should be more valuable. Well, how do you quantify scarcity? There is a known measure, that's the stock-to-flow measure. It's the number of years it takes for a reserve in a certain asset to replenish that reserve. So for gold, there is 60 years of production above ground stock. And so the stock-to-flow ratio is 60. So the scarcer an asset, the higher the stock-to-flow ratio, the higher the value of that market should be. And it's a very principle-based, very intuitive thing that scarce things are more valuable. And this model very roughly, very simply as well, because it doesn't use any other input variables, any other factors to value the Bitcoin. It uses that same scarcity to value Bitcoin. So it's very rough. It's very not precise. And I guess it would not be very usable for trading more than investing. So it's really a very rough compass, if you will, for investors.
Today's video was sponsored by DataCamp. Our world is evolving at a very alarming rate, and so is the need to source, manage, and analyze data more efficiently. As we continue to evolve, there will be an increase in the demand for trained data scientists that can help us make sense of all the information surrounding us. You can unlock this world of opportunities at the click of a button by joining DataCamp today. DataCamp is an online learning platform that provides a simple, straightforward, and efficient way of acquiring data skills. With over 350 data science courses available, DataCamp has something for everyone. Whether you are a pro looking to increase your expertise or a new learner seeking a new career path, you would love the gamified experience that allows you to earn XP points while you learn. Don't know how you fit in? DataCamp has a free assessment tool that gives personalized learning recommendations. Unlock new career opportunities today and become data fluent by clicking the link in the description box below. Our referral link lets you access the first chapter of all DataCamp courses for free, so click the link and get started on this life-changing opportunity immediately. Scaramucci and PlanB also talk about Bitcoin's inability to keep its momentum over the past few months after it fell from an all-time high in November. PlanB states that the Bitcoin market has been plagued with many challenges since 2021. From reports of market manipulation by ETF and the Fed to the Chinese full-on attack on the industry in mid-2021. The pseudonymous investor also adds that talks of interest rate hikes have negatively impacted the market.
There's a lot of stories about manipulation, about the futures ETF coming alive with all the possible manipulation around that. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year. And that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason, very obvious, very clear, to impact the price of Bitcoin. And a lot of tech stocks are going down. The S&P goes down, and a lot of other assets go down because there is a risk of interest rate rise. And the Fed has spoken about tapering, about cutting back on the quantitative easing. That helped any asset increase in value, if it was real estate or stocks or Bitcoin. So if they would stop, if the central banks would stop the quantitative easing, the money printing, that would certainly impact assets, as would rising interest rates, of course, influence the asset valuations negatively. But that's clearly what's going on right now. And by the way, I think they're just talking the talk and not walking the walk. They normally try to push asset prices down, the central banks, by just mentioning rate hikes. And I don't know if they're really prepared to go all the way and crash the stock market, for example. In my experience, it's they won't run that risk. But it will be a very interesting couple of months. And that's, I guess, the main topic right now. And a lot of tech stocks are being hammered as we speak.
Bitcoin is not the only asset that has taken a hit over the past few weeks. Tech stocks are also down, strengthening reports that Bitcoin is slowly turning into just another tech stock. However, we believe any correlation between Bitcoin traditional markets is only a testament that investors in both sectors are currently battling with similar issues, especially the dreaded interest rate hikes and inflation. Thanks for watching the video. As usual, we only have 2 requests for everyone who wishes to support the channel. Please click the like button and drop your comments in the comment section below.